Welcome to The Pulse with Lauren Bango, a DLL podcast series. This is your place for tips, trends, and insights into the world of healthcare finance. Now, here's Lauren.
Welcome back. We are joined today by our favorite podcast guest, John Plantier, otherwise known as Johnny Finance. John, welcome back.
Oh, Lauren, I'm blushing. To be your favorite, that's pretty cool.
So, funny story. We're sitting here on June 28th, and in full transparency to everyone listening, Johnny and I have recorded this particular podcast 3 different times. And the reason we are now on take number 4, so third time was not a charm, is because in the short time, and I would say our team's really, really good, but in the short time it took us to post this podcast, things have changed. And there are so many moving parts right now in the macro world. So super excited to get this update and hopefully post it very quickly so that we can get it out to everyone before anything else changes.
I like that. Yeah, so for anyone listening, the date today is June 28th. So this data is relevant as of this morning of Friday, June 28th.
Okay. So earlier this month, the jobs report showed that the U.S. had added 272,000 jobs in May, but it also showed that unemployment had edged up to 4%. What does this mean?
Yeah, so it's a roller coaster ride, Lauren. And what that means is that you can't have a recession without unemployment ticking up. And not to say that we're in fears of running into a recession anytime soon in the States, but it shows the economy is cooling. And when you look at the fight against inflation too, Friday morning, this morning, we got some promising news against the fight against inflation. But the bigger picture is that means that the economy is starting to cool. And how does that play into the Fed? The Fed then says, okay, well, if the economy runs too hot, I'm going to increase rates, which is what we saw last year and the year before. As the economy starts to cool, they start to determine, hey, are the rates at the right point now? And can we get back on the track and hopefully bring down rates that can help really start to get the economy moving again. So although the economy is cooling, which nobody likes to hear, the fight against inflation is working.
It sounds like this is such a tight wire or tight, they're walking such a fine line where they're really trying not to go too far one way to get, and then we go into a recession, but yet going too little will keep inflation high. Am I understanding that correct?
That is correct. So Powell is taking a very not like they wouldn't do this, but they're taking a very analytical approach, and they're relying on the data to dictate as to what the next move is. Earlier this year they said we're looking at 3 potential rate cuts. Always caveat with we'll see what the data says. Well, now that the data shows that the economy is cooling, they could get back on track. But you back up a month and some of the indicators were moving in a different direction. It's like, well, are they going to cut rates this year? So it's a very fluid situation as we move on, hence the roller coaster analogy.
I was going to say, even earlier this week, I think I was reading a commentary that they were thinking no rate cuts this year and potentially even an increase. So obviously that was before today's data came out, but it certainly seems to be a ton of moving parts, hence the 4 recordings.
Yeah, trust the data. We got to trust the data.
Okay. And so understanding you're now in this global role, let's talk about what's going on around the world. The European Central Bank dropped rates by a quarter bip in June, and Bank of England held. How does this impact what the Fed is thinking, or does it?
Yeah, I still think that it relies on the Fed is going to rely on the data here. There's always a cause and effect when you look at global macroeconomics here, but I think all eyes really look at the Fed and what the Fed Fed is going to do, and they're going to make their own moves based on the data that they're seeing. I also know there's certain parts of Europe that are in a recession now, right? So they're gonna manage the banks are gonna manage those areas as you would expect, and you run into a recession, then rates tend to come down. But I still think that the Fed, in our case in the U.S., they're going to look at their own data and make their positions and decisions based on what is reflected there.
Got it. So understanding all of this and understanding that you can't provide a prediction and you don't have a special phone call into Jerome Powell.
Well, I would love to give a prediction, but that'll be on our own separate non-DLL podcast, Lauren. Yeah.
Well, but what is your opinion on what we should be looking for in the coming weeks and months? You know, we had the report come out this morning. What should people be paying attention to as we're trying to see what happens next?
Yeah, obviously, and I'm going to stress the importance of the data as we see it. Economy is cooling, and you got to rely on what the data says as it comes out. We're also in an election year, which who knows what that'll dictate here in the United States. So I think for the time being, the Fed taking its cautious approach and relying on the data is the best way. It's very hard to say what we're going to look like in December at this point, as we've been talking about the multiple iterations of this podcast, the different news that's coming out on a week-to-week basis. But the underlying tones as we sit here today is the fight against inflation is working, but the fight against inflation also leads to a cooling economy.
Got it. So what does this mean for customers that need equipment today? You have customers out there that need equipment. Do they finance? Do they wait to see what happens? Do they pay cash? What does this mean?
Yeah, they absolutely still want to finance the equipment and engage with us. Trying to predict what the future holds with this and saying, hey, well, I expect rates to come down. I mean, it's a wishing game at this point, and cash remains to be at a premium. And if you're able to spread your monthly payments out over a longer duration here, that's what financing is able to do to help even out your expenses for any business, right? So financing remains an absolutely critical tool for a healthy and successful business.
Thank you so much for being here, John, and I look forward to circling back and learning all things channel.
Thank you for listening to The Pulse with Lauren Bango, a DLL podcast series. The opinions expressed in this podcast are solely those of the participants. Nothing herein should be construed as legal, tax, accounting, or investment advice. Join us again for the next edition of The Pulse.